Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, happy Wednesday. It is officially live stream day. We love Wednesdays. David Era, hey Calvin, good afternoon from Spain. Well, thanks for joining us, David. That's awesome. We're live and ready to go. We have a lot to talk about. Bitcoin is getting closer. It's getting really exciting. There's a lot happening in the markets, and so there's a decent amount to talk about. So let's just jump in. First of all, I did want to say my home base is cryptoinfluencers.com. If you don't have an account there, you might as well sign up. The free channel's here, and then if you're curious, you can hit the pro channel here and learn kind of how to put a lot of my stuff into practice. So anyway, that's kind of the main thing. But yeah, let's just jump right in. So this entire time, I think yesterday on yesterday's channel, I was talking about the S&P's daily, how we had a swing low right here. Well, don't you love it? How things just things just work out the way they want to. The low here was 393.64. Today's low is 393.38. So we are lower. We are lower here. But if X doesn't mark the spot, I don't know what marks the spot. We have a complete touchdown right into our double support. This was resistance, flip to support. We are hypothesizing, and we have a rising support coming off the bottom. They make a perfect X, and the X, if it wasn't as cool, just on its own, it also just so happens that our X is right in the middle of our 200-day moving average as well. There's a lot going on right here, and it is triple support. I just see a turnaround right here. I know everyone, it just keeps bleeding, and intraday we've just seen this thing go down. But there is so much support here. There's support on this line, there's support on this line, and the 200-day is pretty massive. I would expect us to turn around here. I just would. If I was a gambling man, which I am, this is a turnaround. So anyway, it's very interesting. We had kind of a green day, and then we had a red day, and it's kind of been all over the map. We've ranged between our 50 and our 200 all day today. And market is not sure what to do, but I would expect a turnaround. I just would. I'll catch up on a couple things. Peppy Kite, hi Calvin, hello. Investing said is the most bad month for the silver in, I don't know, long silver I hear. Okay, well anyway, that was from David. I don't really follow silver or gold. Just looking at the broad market, the US markets do influence Bitcoin. And proof is, if you get onto the daily, you'll see things moving minute by minute together. Except for today. Today has been very unusual. I've really watched this closely just because Bitcoin is on some crazy developments in Bitcoin. First of all, yesterday we were really in limbo. Today we had a pretty strong day. Like this, we're in a green zone, so this just barely started. In 4 hours, this candle closes, and we have a couple of things here. We have our top line resistance here. This is important to get across. And we have our 20. believe me, if we bleed back down and close below this 20, it's not going to look good, because this big of a wick on top is not going to be pretty. So I'm hoping that the bulls still have some muscle, but there's, a green zone means that we have the 200 on bottom, we have the 100 next and it's rising, and the 50s next and it's rising, and price action is above all of them. So all of the averages are in the right place. This is a recipe for a bull market. All the averages in the right place, you have all your support below you, and you just go. If you ever lose this 50, that's when markets get ugly. But yeah, so we're just gonna have to see. We hit a high today of 24,000, and if I compare our chart with the S&P, there has been quite an interesting difference in these charts. So you can see how Bitcoin's moved up along with the S&P. We did this move together, did this move together, and then we did this move together, and the S&P is dropping at a faster rate. It's been about 45 minutes before we entered a red zone before the S&P did. So there are bulls on Bitcoin, and they are pushing it up today, which is a little bit more unusual. Usually, Bitcoin, it really follows move for move, and today we've kind of shown a little more strength than we would normally. So it's interesting. I still think that there's support in the S&P, and we just haven't seen it yet. So tomorrow, if we have a green day or a jump, suddenly Bitcoin's going to be in a pretty nice spot, and we could really move along. Okay, with all of this kind of in our minds, let's talk about the subject of our discussion today, and that is the weekly chart. So I'm going to take the weekly, I'm going to zoom out, give us as much information as we can get. Garen Group, nice to have you join. Go Digibyte, he says. Okay, cool. So look at this chart. You'll notice that first of all, this is everything. This was our first kind of move up. This was our first wild bull market when we realized that there was a 4-year cycle. This is the top of the next cycle, top of the most recent cycle. You can see everything here in Bitcoin. Now my chart, I have an indicator called Kelvin Moving Averages, and I put the link to download that in the description of each of these videos. But you'll notice that there's normally 3 colors. There's green, yellow, and red. And red is missing. We've never had a red zone on the weekly chart. We've only gone from white, green, and yellow. These are the only colors we've ever had. In order to have a red zone, we have to have price on bottom. We have to have the 50 next, and then you have to have the 100, and then the 200 has to be on top. So that means that here's our 200. The 50 crossed below the 200. We'd also need the 100 to cross below the 200, and then price action just has to be on bottom. And if they're all sloping down, we would have a red zone. We've never had one. But on this chart, you can see that we have some interesting changes. Whenever we change from yellow to white, it's usually followed by a pretty big move. This first one was kind of the only exception. This was sort of a fake out. We exited the yellow zone at about $7, and then we dropped to like 4.5. Like it was a 50% drop. This was definitely a fake out. But exiting this yellow zone, in order to exit the yellow zone, we just have to simply have a close above the 50. Next, you'll see that we ran up, really high, really hard. And then we found support off of the 50 here. But when we lose the 50, we go from green to yellow. So that's how this works. Green to yellow is when we lose the 50 out of a green zone. And So we've moved up really good. This is the place where the market has lost its mind. If you lose the weekly 50 on a weekly chart, you're about to have some serious downside. And this was our first pretty solid bear market. Well, we came up and we attempted the 50 here and then got rejected. And then when we attempted it again, look what happened. Closing a candle above the 50. This was $281. And we went straight up. All of our averages aligned. We hit a green zone. And this was our first wild run up to 2017. And we captured a lot of attention. Well, then here we go. We dropped out of the 50 at 7,000. And we ended up going ultimately down to like 3,000. Well, this particular time was the most unusual because we're coming off a bear market. We did get out of the yellow zone right here. So a close above the weekly 50 got us. We were about $6,000, and we went up to anywhere from about 11,000 to 13,000. Exiting at 13 would have been impossible. But yeah, you could have exited around 11 or something. So there was potentially a double on the table. So a double on Bitcoin price by exiting this this yellow zone. So closing above the 50 here was major. Now, down here, we went from yellow to white to yellow to white. So is this a fake out? It is not, because look what happened. Had we said, oh, we just exited the yellow zone and we bought in right here, this would have been 7,400, and we might have got faked out. Our close was 7,000 or whatever, but then we exited again, 7,500. So your entry points after exiting the red zone or the yellow zone would have been pretty decent, and then 81 or 8,200 would have been this one. So if we'd have entered at any point here, here's our green zone. This one moved us out. So we went from green to yellow. So this is the exit. So the exit was around 8,000. So this would have been kind of a nothing burger, but there was some upside if you were looking at this more intraday or something, or intra-week. And then we had the COVID crash. So exiting green to yellow would have saved a lot of pain during this COVID crash. But then, here we go. We exited the yellow. You could either say here, which was almost, 8,900, or exiting here at 9,700. Either of these entry points would have been unbelievable, because then we went up to 60,000 or whatever on our first run. So this would have been a fake out. So that, not much you can say about that. This was a one candle. We just barely missed it, and then we popped right back up. So this was a move from about 31 to about 70. So this was a double from here to here. So that would have been pretty brutal. But here, when we exit the green zone, you know that you've got a pretty big downside here. This was our fake out, and this actually caught me. Back when I was trading this, I was like, oh wow, I guess we're going. So I had a hard time trading this area, but you can kind of get the idea. There's a fake out here. These wouldn't have amounted. This sort of sideways wouldn't have really amounted to much. But every other exit, especially off the bottom of the bear market, every exit of the yellow zone has just really paid off big time. So now let's look and see where we are. We are right here. We're in the yellow zone because we are below the 50. If we close above the 50, I mean, it's going to be the most bullish thing ever. It's going to be awesome. And our 50, the cool thing about the trying to exit the yellow zone is when you finally have strength, then you start going sideways or ranging or getting strength. You're going sideways, and if you do it long enough, the 50 comes to you. Like, you don't have to reach up and break anything. You have to just be patient and wait for it to come down. Our 50 right now at this exact moment is 24,085. Today we hit 24,000, and last week we were above it for intra week. So we were really close. Like, this was getting exciting. I don't know, how everything will play out as far as, how much time will it take to really break this. but when we do break it, it is going to be explosive. It's going to be awesome. So I know that we got really, really overheated, and then we've kind of slowed as we've approached. But if we have a couple of weeks where we're just trending down, following the 50 down, then our next move, the smallest green week will cross this 50, and it will be go time. So things are really, really coming together. There's a lot of excitement here. Could we feel some pain before we get there? Possibly. I mean, there are definitely cases in the past where, like this 2015 experience was pretty rough because we did get pretty overheated and we rejected, and we were really close, and we ultimately had quite a drop before we kind of gained our footing. But once we were out, we were on our way. So as long as you don't, have an over leveraged or a really rough position where you can handle, some type of rejection, it's just a matter of time. Because had you entered, if you'd gotten too excited and bought the top of this at 309, 310, we ended up actually breaking it at 284. So it really was only a $25 difference. It was not huge. So now that we're in the vicinity, it's going to happen pretty soon. And breaking this, you can see how we got super excited. We initially rejected off the 100. This is what I'm expecting. I'm expecting that we'll probably break the 50 and go straight to the 100. And then here we rejected pretty decent. Like the percent moves on this are pretty massive. So this was pretty emotional back at the time. But then, we ran up again, came back, found the 100 as support, and then off to the green zone. It was pretty beautiful. And then we ran all the way up and had a good old time. But I can easily see that happening in today's situation. We could come back a bit. In our case, we have the 200 in the way, which is unusual. This is something we have never experienced. But if we break above this 50, that will give us a lot of momentum. And as long as the 200 is not too far away, it'd probably be pretty easy to break that. I'm betting we go straight up to the 100 and then reject and then find support off the 100 or the 200 or the 50, depending on how much time has passed. And then we're off to the races, and we're going to probably head into a green zone. So there's a lot to look forward to. How soon will we get there, and how pretty will it be as we go? It's harder to tell. It's harder to tell. But we are in a green zone on the daily, and we're just getting data as we come. All right, look at that. So during this conversation, our Bitcoin dropped below the 20. Oh man, it's going to be another one of those photo finishes. So 4 hours from now, we're going to be kind of looking at the close and looking at everything. Yeah, boy, pretty rough. I sure hope we can recapture that and get above there, because this is going to be an ugly candle if we close pretty low down here. But yeah, anyway, pretty interesting stuff. All right, Philip Zach says, Calvin, let's go. Chris Wozek, sorry, I can't pronounce. Hi, Calvin. Always forget about the live stream. Keep up the good work. Thank you. Dilemma says, good vibes. Ras Palmer, I think the bearish divergence is playing out. Yeah, we do have a problem called bearish divergence right now. We've got lower RSI as we go down, and we've got higher highs all the way up. So something has to break to resolve this. Either we go crazy up and RSI crosses this line and closes up here, or at least above this point here, because this was our top, our most recent high. If we get back up into 70 land, then this bearish divergence is resolved, or the price can come down. And if the price comes down, we need to see a lower high. So in that case, we'd have to come back at some point here A lower low would really cement it, but a lower high would resolve this as well. So we're kind of waiting on pins and needles to see how that plays out. Very, very curious with, kind of following the moves of the S&P. Yeah, no rhyme or reason. We just decided to die. Big move, didn't really follow the rest of the market. So we were kind of outpacing the market, and now we're underpacing the market. So just crazy. You can't predict these things sometimes, When you have big players that have money on the line, you can always get surprised. So that's the point of keeping your risk management at the forefront, being patient. You can't get wicked out or surprised out of a position by whales if your position size is small enough that you can handle anything. The current 4-hour candle is not looking pretty, says Blue Sky. Yeah, that does not look very pretty. For a minute there, we had kind of exited the yellow zone on the 4-hour, which was good. But yeah, it looks like we're heading down for the 100 or the 200 down here. So yeah, you know what? It's just a matter of time. As long as we can handle some volatility and we can be patient, it will be game on if we can just close above the 50. And the 50 is moving down at a pretty regular rate because we're removing these highs off of our 50. Things will flatten once we get down to the actual range down here. But right now it's dropping pretty steeply. So it's 24.86 this week. Last week it was 24.44, so it was $400 difference. And then the week before that it was $729, so about a $300 difference. So yeah, if we're doing about $350 per week, we're going to be at 23.8 or 23.7 probably next week, and it's just going to keep dropping. And at some point, even going sideways, we'll cross this because the 50 has to resolve somewhere in the average of our most recent price action. That's why we're so excited to see sideways consolidations at the bottom of a move, because your averages come down and it gets really easy to cross them, and then you can get into a pretty bullish situation pretty quickly. But these are weekly candles, so it's not like we're going to all get rich tomorrow. We have to be patient and make sure that the portfolios are in a place where they can handle some wiggle room. But I am just not in the camp that we're going below 16,000. The bottom it's just in my opinion. We've had lower high, and now we have a higher high. This is a full momentum shift. Catching it on the swing down is the perfect trade. So if we can swing down and catch it and then cross the 50, we're going to be in a pretty good spot. And I really, really strongly expect that the S&P will help us. Our intraday action has been pulled down 6 out of the 7 last days. This gap's so much lower that it was pretty brutal no matter what happened intraday. But all of these candles bled off intraday, and today's no exception. So if we could get if we can get this bottom in right here, like if this really is the pivot, which I really believe it is, I mean, it's classic on every angle. Support off the 100, rising support, confirmation on the breakout, like everything's lined up here. We should start getting a little help from S&P, and that would carry Bitcoin. It really would, because we're following it pretty closely. Chris says, sorry about your last name. He says, sorry, no worries. It's not an easy name. Have you seen the trading strategy using Echo, volume oscillator, and one other TradingView indicator? Can't remember the last indicator. So my personal trading strategy, the interesting thing about, just me being I've traded for 20 years, and I've been in Bitcoin for more than a decade now. I've learned through all my years that it is not the indicator that makes you the money. It is your risk management that makes you the money. You can trade off of any indicator. Some indicators are better than others, but if you're looking at indicators and you're doing it the right way, because the longer the time frame, the better chances of actually making a decent profit are there. And if you can use any indicator, as long as you're consistent, if you get a buy and you put in an order and you keep your position size in a place where you can handle ups and downs, even the best indicator that's hitting 90% of everything, those 10% times when things just really fall apart, if your risk management is in place, your position size is small enough that it drops, and it drops enough that it's a smart place to re-average if you get another buy signal, and you're not wiped out or liquidated or anything like that, you can do well off of any indicator. So I don't follow that one specifically, and I know there are a lot of indicators out there. I just keep things fairly basic because I like to trade things that most people are familiar with. When there's a lot of retail that are reading the same thing, and if there's a lot of whales that are reading the same thing, then support, resistance, strength, weakness, they all kind of work themselves out. So I'm kind of looking at RSI and I'm looking at moving averages. It's just about as basic as you can get, but I can make a living doing it because my risk management is on point. If I've got that figured out, then you can pretty much use any strategy and you can be successful. So there's no, the channels out there that are like, oh, I've made my super secret indicator that nobody's ever heard of. Well, even the best indicator will blow up your account if you've got risk management off, and almost no one teaches you risk management. So that's kind of the purpose of the pro channel. Dean, is Blastoff like humble FTX Tickery Rob Luna's $1 trillion? I'm sure that's a slam against humble. I don't. Yeah, I mean, I'm only looking at what the chart's giving me, right? So you can speculate all you want and you can promise anything you want, but the chart's going to do the talking. And is there evidence here that exiting the yellow zone is a good place to buy? Yeah, there is. There's evidence here. There's pretty good evidence all the way across. There are some fake outs, but at the top of the bull market, this is a little, this is pretty rough. If you're buying after the bottom of the bear market is in and we're exiting the yellow zone, there's evidence to show that it's a decent place to buy. Is this financial advice? No. Is it attached to anything else? Not necessarily. I'm sure that this probably plays out in many places. Let's look at the S&P. Yeah, if the S&P ever gives you a red zone, man, that's the place to buy. If you're exiting the red zone is absolute money and a half when it comes to that. On the S&P, you have to be a little careful exiting on the green zone because S&P generally trends upwards. So calling tops and whatever is a little harder, but really finding a safe entry point is much easier on the S&P. And yeah, anytime we were in a green or a yellow zone and we flipped to white, these were pretty good places to buy in. There was usually a pretty decent move coming up at the end of these. So anyway, yeah, there's a lot there. All right, let's see. Would you define small enough from your point of view? Yeah, the small enough. So I personally trade 100 different coins, and the largest position I ever put in is about 1%. Most often I'm doing a fraction of a percent. So when I trade, everything that I've been trading regularly is on leverage. And so I don't really care what my leverage is. I just care what my exposure is because that's what my true risk is. And I like to keep it at about 0.5% of my portfolio or lower. In my case, I've got kind of an income strategy, so I just do the same amount, and it's a small amount, and I just do it every time. And that way I can roll with whatever the market gives me. When it's time to take profits, I just put that in my pocket. If I've got a position that's upside down, I can ride it upside down for a long time because it's not gonna, it's not gonna threaten my portfolio, and I'll look for a new entry point. And if I find a good entry point and it creates a good average, then I'm off to the races again. It's just a matter of being patient. So all that I teach you on the pro channel. But yeah, I would say I'm usually doing like 0.5% of my portfolio or less. The only exception to that is I do trade a little bit higher positions in Bitcoin and Ethereum because usually they're moving a little slower. I'm not going to get wicked out or something crazy usually. Of course, Bitcoin's full of surprises too. But yeah, I was not expecting this candle here. This one was definitely not quite, I was not quite positioned for this one. But yeah, I still had my position in a good spot where I didn't get blown up, but that's the name of the game. Calvin, can you do $1,000 challenge? Can you do a video series of how you would grow 1,000? Well, so I do on the pro channel. I trade more than 1,000, and every single person there watches every trade I make. You see all my adjustments, all my, and you'll literally watch me, do everything. So if I make money or lose money, it's all on the table. You can see what I'm doing, but the philosophy behind it is more important. How much money I'm making isn't the main important thing. It is can I teach other people to not blow up their account, to change the way they invest, moving away from that mindset of we're putting, I'm betting $1,000 on something, and whether it blows up or not is just a total gamble. I'm getting away from that and creating a consistent positive return. So that's kind of the goal. So good question though. That was Philip Zach. Thank you. Spencer S. Small enough is different for each person. That's the caveat. That gets most, I think. I had to work through that myself. Turns out it's smaller than expected for now. 100, 200 per trade with maxed margin. I hate that I can't fix my terrible grammar from fast typing. Yeah, it's okay, Spencer. Exactly. So it just has to be a percentage. If you're trading a $10,000 account and you're making $50 trades or $50 exposures, that may not seem really exciting. But if you have 100 positions, you've got half your portfolio fully invested. And when that portfolio doubles or triples on you, your overall portfolio will do really well, but you have a backup plan. You have liquidity, and you've got the ability to adjust when the market goes against you. And so, would you rather take the 10,000 and put it on black and gain and lose, half of that or all of that over a few months, or would you rather, make a solid 50 to 100% annual return? I mean, come on. It's not like you're losing money by being, smart about it. So that's kind of the concept. Chris, do you ever short? Yes. Yep, I short. In a couple of shorts right now. And I same concept. I'll keep it until it goes my way. Shorting has a lower reward and higher risk. So you have to be very careful of what season you're in. We are coming off the bottom of a bear market, and so shorts are going to be a little scary. I'm more looking for longs, even if I'm upside down for a while, than looking for shorts, because this market is really at a flipping point. We are $600 away from breaking a weekly, exiting the yellow zone on the weekly. It's pretty scary to be going big short right now because if we have a random day where we get up there and on a Sunday, if we close, like this thing could really take off fast. So we don't want to be, caught in a place where we have tons of short exposure. But, there are some coins that did present an opportunity that I couldn't ignore. Like, for example, Alina, I couldn't help but short this one when it went up Yeah, 58% in a day, and there was no news, and there was nothing to back it. It was kind of like, yeah, I think I'll go ahead and take that one. But yeah, I do short. Let's see. Fabio, hey Calvin, just out of curiosity, for those that aspire to live off of trading, how big a portfolio do you think is needed in order to make around 50,000 a year? Well, the main challenge with investing for a living is you have to have a buffer where you can actually take out money to live on, right? So, for example, even if you were shorting at the top of this and you were kind of making money on the shorts, this is a year is a long time to be making money off of shorting because you're essentially I don't know, it just depends on the season, but you kind of need a buffer that you've got money in the bank that you don't have to pull out of your investments. As far as the market goes, I've kind of noticed that these things happen in about 6 month to 1 year cycles. So like these rolling moves, we hit a high, and then our low happened. Well, I guess that's three months later. 3 months later, we're down at the bottom, and then 7 months later, we're back at the top. A year later, we're at the bottom. The payday doesn't happen every day. So I have to sit in upside down positions sometimes for an extended period of time. It's months and months. And so you have to be able to have something off to the side because you don't want to be exiting positions that are in a bad spot just because you need liquidity. You kind of have to have a buffer. So to make 50,000 a year, like if you didn't need to pull out the 50,000 a year, let's say for some reason you have a portfolio. Do I think that the Pro Channel could take 50,000 and make 50,000 in a year? Absolutely. I think they can. In fact, I think they could do better than that even. But does that mean that they should be, putting 50 in and then trying to pull out, 5,000 a month to live on while they're trading? It's a little hard. You don't always have it. It's kind of like when it rains, it pours, and that can happen both ways because sometimes your entire portfolio is upside down and you're just waiting. It's just pain management, and just waiting for things to change. And then other times you just hit everything. Like when we entered all those, we literally entered 100 longs down in this area here. And when we got up to here and started showing weakness, it was just payday city. Like we exited 100 positions all at once, and it just happened all at once. But really nothing's happened for a month. You know what I mean? Ever since all that came out. And so they happen in such sporadic cycles that you really have to have a budget and a pretty good discipline. And, you never know what'll happen. So it's kind of risky. You really have to have a buffer. And in my case, I kind of have a buffer. So I can sit on positions for even a couple of years and it won't really impact my day-to-day life. And that's kind of where you want to be eventually. But could you work a job and could you put aside $50,000 and build a sweet nest egg over the course of time while you're working and paying your bills that way? Totally. In fact, that's like the goal, right? Especially if you enjoy trading, like that's what you want to do. You want to be building that nest egg on the side and doing that. And that's kind of what I'm trying to help people understand is that, you can make a living doing this. I have for years, but I'm also super patient and it's all about risk management. If you ever get bored and you're like, okay, well, I think I'll make I'm going to make a risky trade. You're just going to get killed. Whatever you put in is going to go bye-bye when you start losing sight of risk management. So as long as you're consistent, you'll do good. That's what I was going to ask. If you short, do you set a stop loss? So my positions are small enough that I don't use stop losses. And the reason why, there's a lot of debate there, right? I know that SBF and what's her name? They were getting grilled because they're like, we don't really use stop losses. Well, I don't either. So there's, what company do I keep, right? Well, the problem is when you set a stop loss, whales hunt for stop losses. That's how they get their liquidity. Just look in the last 24 hours. If you had a stop loss and you were trading Bitcoin, would you have been stopped out in this 4-hour time frame? Absolutely. You'd have totally been stopped out. Whales hunt for liquidity and the liquidity is in the form of stop losses. They create short squeezes and then they create long squeezes, and they just do it back and forth and take all your money. And so what I'd rather do is I'd rather take a position that I can handle being upside down a decent amount and make a conservative buy-in, and then I have my target. And I sit my targets out there. If things get really hot, I'll take profits way up high. That way I can go to bed and sleep and not care what the market's going to do, and I can take profits as the market moves my way. And then if the market goes against me, well, I'll put orders to break even or whatever, just so that I have a chance to exit if the market ever comes back around. But in the meantime, I'm looking for new opportunities. If the market's up, I'm looking for shorts, and if the market's down, I'm looking for longs. But I'm looking at this in not just days or minutes. I'm looking at years. When the market's up, I'm talking about up in a 4-year cycle. Is it down in a 4-year cycle? Is it up in a 4-year cycle? Those are the decisions that I'm really looking at. I'm going to be basing my portfolio on that time of year. And then back to the original question, can you do this, on a $50,000 thing? Well, the cool thing about the Pro Channel is that we only trade once a day. So you can actually have a job and do this because it takes me about 30 minutes to 45 minutes to just evaluate. And honestly, if I wasn't explaining things, it would probably make me 10 minutes or something. But the idea is that you just go and you check. You make sure that the positions you like are good. If anything's fallen out, you make an adjustment. And then you don't care what happens for the rest of the next 24 hours. And then you go back to the market and you go, oh, well, that one's on the way up. Oh, this one fell apart. Okay. And then you just make adjustments and you move on. And slowly over time, you just average by making money. You just make money doing that. So it's not complicated. You just kind of have to see it in action. And if you're the type of person who's really, like let's say you're an impulse buyer, or you get really excited about things or really scared, some trading isn't for everybody. There are people that have joined the Pro Channel. They got too excited. They didn't listen to the things that I was teaching, and they got over leveraged and they blew up their account. Like, I can't stop people from not following me, or not to say that you should follow me, but at least the principles that I'm teaching. That's kind of what I'm saying. So if you get too greedy, you could get blown up. If you kind of keep things conservative and listen to what I'm actually saying, then you'll do well. You just have to be patient. All right, Michael. Hi, Calvin. Do you see halving event having less and less influence on the market as the circulating Bitcoin inventory rises? At what point will the halving no longer be an event, as we're already over 19 million Bitcoin mined? Exactly. You're really, really hitting on a major, major thing. So if I go out to the weekly, these red arrows are the halving events, and you can see historically, you can see the impact. People are like, well, Bitcoin went up because it went up in such a dramatic fashion percentage-wise because it was just cheap. Going from $11 to $1,000 was pretty easy to do because the price was cheap, markets were thin, And then here we had the halving event, and then we went up 20x. This one was more of a 6x. So our money is moving, but a big part of that was that miners made up the entire economy back here. that 50% of the entire Bitcoin money supply showed up in those first 4 years. And miners have an incentive to mine as much as possible. They're paying bills. They have electric bills. They're buying new miners. They're trying to have a huge percentage of the mining. What do you call it? The hash rate. They're trying to corner the hash on the market. And so miners have an incentive to spend their Bitcoin. And so during that first 4 years, they mined a ton, and then they would sell a decent amount and dump those on the market so they had cash to pay electric bills and to buy more miners and to expand their operations to stay ahead of the mining game. Well, when that first halving happened, those miners suddenly had half the Bitcoin to sell. And where they were used to selling, hundreds of Bitcoin, thousands of Bitcoin to pay for their operations, they could only sell hundreds. And that shock in supply absolutely blew this thing up. And it was a percentage of how much the miners had to sell. Well, after this bear market, we got to here, and miners were still selling like crazy. But literally, when the halving occurs, they have half to sell. And prices can still drop for a bit. And I've noticed that had happened over the past few halvings. And that's because they still have a storage. But when they run out of their storage, then they have half the amount of Bitcoin to sell. And if they have less Bitcoin to sell, then the market just runs because supply and demand, supply just dropped in half. And there's so much less selling pressure. Well, as more and more Bitcoin hits the market, the halving has less impact, because if the miners are selling a little bit less, but there's so much more in float, we're going to start seeing a difference. And eventually this 4-year cycle will kind of be a relic of the past, because it'll just be the economic cycle. It'll just follow the world economic need. It'll kind of follow that. Or it'll be that, depending on how big it gets. But, so yeah, it's very, very interesting to think, how this plays out. But miners had a huge impact on the selling pressure, and now they're having less and less and less. And so you can see in the shape of the chart that when miners had a ton of control and it was forced away from them because of the halving, the price launched. And then they had less control, and their selling pressure was forced away by half. It went up a lot, but certainly less than this move. And now miners are starting to have less control. We're starting to get these intra 4-year cycle moves and different things. And I kind of feel like, we're going to start seeing a little bit more abnormalities than usual. Is there still a lot of structure, and is there a lot of anticipation? I mean, there's a lot of self-fulfilling prophecies around the 4-year cycle, and people will make moves trying to either get ahead of that or playing along with it. And so it'll probably still happen because of just human behavior and self-fulfilling prophecies, but the miners will have less of an impact over time. So that is a really, really good point. Eventually, it'll just cycle as it does. It'll just be a normal market, and it should just continue to go up based on inflation, but inflation is very small. Like even 6% means that Bitcoin price should go up 6% per year. And we're at what? 23,413 times 1.06. Yeah, we should go up to 23,817 if inflation was the only driver. So yeah, eventually it could be a pretty awesome store of value, but still there's a ton of speculation and a lot going on here. And there are new entrants that can come into the market. So this is going to still be a really fun, wild ride for another solid 10, 20 years. And then things might get a little bit more boring. Blue sky. I was recently watching a finance-related video, and the guest felt that USDT would depeg sometime in the future. He said because of Tether's history and the SEC going after BUSD. Your thoughts? So the funny thing about Tether is that I was the most skeptical of Tether when it first showed up, because it was the only one, and the issuer was Bitfinex, who had blown up some things and screwed up, and it was almost a scheme for them to grab money when they were down or whatever. But the one thing about Tether is that they have managed to pull off whatever they're pulling off. And they've done it in a pretty good way. Like I just, it's if it lives on the blockchain, and the right economic forces are in play, it's kind of hard to take away. I mean, if you take away the issuer and the redemption process, then things could get pretty ugly. But if they have digital assets to back their price, which they've been around for so long that they've got some serious piles of Bitcoin to shore up, they probably have the ability to keep it pegged better than any other currency. With USDC, it being sort of in bed with all of the regulators and all the things, I almost feel more nervous about that than I do Tether. I'm actually more comfortable holding Tether than USDC. But, it is a wild world out there, now that SEC is pointing fingers at everything and all of that. It makes me a little uncomfortable. So, yeah. The question is how do you take it down, and where do you take it down, and what happens next? Because if they do take it down, then where does the money go? Money flows into Bitcoin, and then the bag holders are trying to redeem and they can't. I just think anything that blows up on stable coins will actually cause Bitcoin to go up, not down. So I don't know. Barbarian Cauldron. Hey. All right. We've had a pretty good session, guys. We're 51 minutes from going live. But yeah, all eyes are on this yellow zone. We are so close to breaking out of this yellow zone. It's ridiculous. And we've had a couple of weeks to pull back a little bit. So it's not like we're really, really toppy as we try to slip through. We've got a pullback that makes sense. We have another pullback that's getting a little bit stronger. The monthly chart was not helpful. Monthly was technically resistance. The monthly, 23,992 is our monthly number. In fact, sad to say, this could potentially be our rejection off of the 50. This is normally a reversal candle. That means March should be red. The greater than 50% chance on this, just reading this chart, is that we're red in March. And this little candle, this little hit today at 24 might actually be our rejection point. So there could be a little bit more pain, but we're so close, guys. So close. Like within a couple of months, we're going to be blown across this, and it's going to be the best buying opportunity, because this is confirmation. Where we were speculating that this was the bottom, exiting the yellow zone on the weekly is absolutely confirmation. This is when we want to run and have a good old time. So for now, we're just trying to be careful, make sure that our positions aren't too greedy as we get closer. But you can tell that the anticipation is here. Like, we're really getting exciting. So that's pretty much all of the content and questions. That was pretty fun. We do this every Wednesday, 12:30 Mountain Time. It's cool that you guys take time to be here. That's pretty cool. But good luck to everybody. Hopefully everybody's staying safe. There's a lot of good things coming our way if we can just keep in the game and be positioned for when it all happens. But I really think S&P is going to start helping us. So I'm curious to see how tomorrow comes out. All right, you guys, we'll catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.